Welcome to another Tracking Trends Thursday with Kristen Mason Coreas. Today is Thursday, March 19th. Happy belated St. Patty's Day for those of you who celebrate. It is not today. I'm not wearing green. I did have my green on was it Tuesday? I think it was Tuesday. Today is Thursday, and let's talk about what is happening in real estate. We start looking at the bigger picture, and then we always end with the hyper-local information that we run specifically for the Arlington, Alexandria, Fairfax, and Falls Church areas. So make sure you stick around for that if you're interested. What you're going to see even today, it comes up all the time. What is happening nationally and even regionally is not always the same as what is happening locally. So it's good to kind of know it all, which is why I share it all with you. So interest rates did go up. 6.22 is the average as of today. That is higher than where we were, 0.11 up from last week. It is still lower than we were last year. So, and you can see the lowest we've been is just below 6. So, and last year at this time we were at 6.67. So not a horrible place to be, but not the best place to be either. And the Fed did meet this week and they did not drop their rate, and that's here in the middle. And they indicated that due to concerns about inflation, they're not sure if they are going to drop rates further into the year. So TBD, there's also going to be a change in the Fed chairman here shortly. So that may change their track as well. Builder sentiment, there's a couple of things in here about builders. So when we talk about builders, that's what's happening in new construction. New construction impacts overall total inventory. In our area, we don't have a ton of new construction, although actually there are some projects. There's, frankly, in Kingstown, there's a new construction of a bunch of townhomes happening right now in Kingstown. So every once in a while, that was in the old Topgolf location. So sometimes they tear things down in order to build things new. We don't have a lot of land sitting around, but sometimes, again, they do take down and build new. So that's why we talk about what's happening with builders, is to understand what's happening with inventory. And again, in some other areas that will have a larger impact than it does impact us here in the Northern Virginia area. So builder sentiment did edge higher in March, although they still have some affordability concerns. And new home sales, jumping ahead here, plunged in January, the biggest drop in 13 years. And so that is a troubling sign for builders. So builders are looking at these types of things to decide if they're going to build and create new inventory or not. Pending home sales, that's what we see most of in our area. That's existing homes. That unexpectedly increased in February. To me, I wouldn't say that's necessarily unexpected. January was slow because of the horrible snow that we had. So I'm not terribly surprised to see more activity, more pending sales in February, because that was probably pent up from what we normally would have seen in January. And also they're saying here, improved affordability and lower mortgage rates. So to me, that's not a big surprise. And inflation concerns do continue to persist. Wholesale prices rose sharply in February, and so that's another reason why we might not see interest rates come down. And jobless claims, though, fell to the lowest level in January. So also I think that's a sign of interest rates not coming down. And we're in a war. So that is the wild card in terms of what happens with our economy and with our real estate market. So in our mid-Atlantic region, the new listings finally, after many weeks, after 6 weeks, this is the first year-over-year increase in new listings. However, in the DC metro area, as I said, sometimes things behave differently. In our area, we were one of a few, including Philadelphia and Southern Maryland, where new listings were actually below what they were last year. So in other areas, they finally went higher, but in our area, they did not. Contracts are slow compared to a year ago, down 3.1% overall in the Mid-Atlantic for the third week in a row, with a year-over-year decrease. However, the DC metro area showed gains in contracts. So again, even in our little area, we are doing things, we are seeing things happening differently than we are in the larger area. Price growth is stalling. The median list price is down 1% from this time last year. And median list price has seen some ups and some downs. as related to, what does it say here? Greater supply, with supply being greater than last year and demand being slower in response to some economic uncertainty, we're seeing sometimes price up and sometimes price down. So a little bit of wait and see, a little bit of we're not sure what's happening is happening in the market for sure. The DC metro area, so the larger DC metro area, so you can see here the showings were up compared to last year and up 4% compared to last week. Purchase contracts also up 12% compared to last week and up about 3% compared to last year. Time to contract, longer than last year by 4 days, but shorter than last week by 2 days, with a median time to contract of 25 days. New listings down, as we mentioned earlier, by almost 4% and essentially flat week over week. And median list price basically flat year over year, but up week over week by 2.4%. Active listings, which is different than new listings, so that's your total inventory, is higher by 11.4% from last year, not drastically, and higher 4.7% than last week. So overall, that looks relatively healthy to me. In our hyperlocal market, Arlington, Alexandria, Fairfax, and Falls Church, where we do most of our business, everything was up both year over year and week over week. So you can see our weekly inventory and our weekly new contracts were higher than they were last week. And this shows you by how much they were higher than the week before. And this is year over year. So inventory was, what is that? That looks like, I don't know, maybe 10% higher than last year. And it was a touch higher than, so contracts rather were a touch higher than last year, but not by much, relatively flat there. And the demand to supply ratio is at 74% now compared to last year, 81%. So again, that's a healthier place to be in this year than it was last year. That means the buyers have a bit of breathing room, that not all the inventory is getting gobbled up by the amount of demand. And days on market is 19, unchanged from last week. So 19, right? That's not a lot of time. So be aware, as a buyer, things do tend to move quickly, especially in our area. And that is Breaking Trends information for this week, March 19th. On the ground, I'll tell you, I did just ratify a contract today, and that home had been on the market. How long? We tried to negotiate it down because it had been on the market, I think maybe a week when we started negotiations. Maybe not that long. But point is, there were no other offers. And, because I track the data, I felt like buyers might have a little bit of room. And so we did try negotiating down. We ultimately did maybe a little bit. But the other thing is it's not all about price. And so in this case, though we were able to come down on price a little bit, the terms were not exactly what we wanted either. And there was, for example, a rent back that the sellers wanted for free, and that equals money to the buyers. And so it kind of all came out in the wash that we didn't get much negotiating accomplished. We didn't accomplish much for our buyers, unfortunately, in that situation, although we did get them the home that they wanted. We did show them a couple of other homes, and ultimately they did decide that this was the best of their available choices, and they did want to get in hopes of beating further interest rate increases. And so we ratified this morning. We're doing a home inspection on Saturday, and hopefully they'll be moving into their home this summer after that rent back period. So that's a little bit of what happened on the ground for me this week. And anytime you want to talk about what's going on with you and how the data impacts you and your decisions, please reach out, 571-210-1866. You can call me or text me. And you can email me at kristen@homesbymason.com or check out the website anytime. homesbymason.com has some good information there as well. Thanks for watching and have a great weekend.